Ladies and gentlemen, it is 9 o'clock Pacific time here on the West Coast. On the East Coast, it is already the dawning of a new day, and we are just getting to Meta Platforms' Q4 earnings. And I know what some of you guys are going to say. You are trying to post this video as late as possible because you have been wrong about Meta stock for a long time. The Investor Channel dude has cost me a chance to make life-changing money in Meta Platforms, which over the last year is up 157%. Well, on today's show, we are going to debunk some of the myths around Meta Platform stock. We are also going to get into the numbers and take a look at them and take a look at the all-important Reality Labs, considering this company never talks about it, and now it's an AI company. But we're also going to talk about some of the absolute sexy, sweet music that Meta Platforms sung to us after reporting their earnings, including a massive $50 billion increase to their share purchase, otherwise known as a buyback, and initiating a dividend for the very first time. It's a good thing my wife's not in the room, considering how I'm looking at Meta Platforms at the current time. Now, some of you are going to say, this dude has been wrong about Meta Platforms. That's because 2 years ago, you all saw the video that I posted after Meta Platforms reported these same Q4 earnings, and shares of Meta Platforms were at $323 per share, and in the after hours dropped over 21% to $252. And what did I tell you on that video? I told you to sell your shares of Meta up here at $250 per share. And over the next 4 or 5 months, Meta shares simply went down and down and down all the way to $90. So if somebody told you to sell at $250 and 5 months later the shares are at $90, I'd probably give them a butt slap or two. Now, some of you are going to say, well, Investor Channel dude, you never got back into Meta. Well, unfortunately, you guys didn't see those videos because 3 stocks I bought today, I published this on August 30th. What was one of the shares and one of the stocks that I bought? Well, it was Meta Platforms at $150. And then numerous times, too many times to count, I recommended you buy them on the FANG Stock Recap Show, including on January 13th, which just happens to be a special day for me when I tick 1 year older. A year ago, on January 13th, when shares of Meta were about $140 per share, I told you to buy again. So we told you to get out at $250. We didn't bottom tick this one at $90, but we told you to get back in at $150 and $130. And so if you've taken our advice, you've probably made a cool bit of cash like I have, as I've long sold my Meta shares, my Nvidia shares, my Apple shares, my Amazon shares, and I bought a cabin. And I was sitting there on my birthday just a couple of weeks ago by the fire playing chess with my son, and it was maybe one of the best moments of my entire life. Now, speaking of great moments, when Meta reported their earnings after the bell, it was unfreaking believable. These results from Meta are so great, and I love the fact that they are initiating a dividend, something that tech companies have been almost allergic to in Silicon Valley. I love that. The $50, or not $50, but $50 billion buyback, also very much fantastic. Also fantastic are these results, which we'll get to in depth here in a second. Revenue coming in at $40.1 billion. Guys, that's 25% growth over the last year. That's making like, what is Google doing? Like that when I saw these results, I was like, what the hell's going on at Google? They literally have the same business. I know Meta's ads and all that stuff and the conversion's all a little bit different, and they have a little bit more information on the users, but not much. Like, what the hell is Google doing? The fact that Meta can grow 25% in a quarter, they beat expectations by $940 million. Now, what gets even better than that, other than the dividend and the buyback, was the fact that we're expecting first quarter revenues to come between $34.5 up to $37 billion. Folks, Wall Street expectations at the time of publishing was at 33.87. People have already ticked these up to 34, but the high-end Wall Street estimate for Q1 for Meta was like $36 billion. So they're coming over that. This company is firing on all cylinders as it relates to advertising, and you're growing at like a 20% rate in Q1. So what is going to happen? And this is why the stock is up over 15% in the after hours. We'll see how this thing settles in tomorrow. My guess is it's going to follow through, because with Meta, Q2 is too low, Q3 is probably too low, and Q4 is way too low. The fact that they just put up a quarter where they did $40 billion, I'm expecting better than 10% growth for the Q4 of next year. Obviously, the economy can fall off the cliff. You could have competition and all that other stuff kind of eat into growth rates, but I got to expect you're going to have better than average growth rates heading into Q4. So Meta's next 4 quarters are going to have to get re-rated, and it's so impressive. And so while I was very critical on this company 2 years ago, and I think it was justified considering shares of the company went from 250 down to 90. And when we come over here and look at the financials, the Reality Labs business is still an absolute disaster. But what is not a disaster is the ad business, and the fact that this company has pivoted a little bit to an AI company as well, and it's doing a fantastic job. And then on top of that, now you got a freaking dividend and a buyback. There's not a lot to not like over at Meta. Revenue coming in at $40 billion, which we talk about, is going to have to re-rate the rest of these quarters higher, I think. And the fact that companies guiding to upwards of $37 billion, and if they beat expectations, they get to 38, 39 in Q1. Where the heck is Q2 and Q3 going to be? It's probably going to be absolutely fantastic. What this company has done, like almost every other tech company in Silicon Valley, is they've slashed expenses. Look at this, from 25.6 or 25.8 down to 23.8. I mean, you shaved $2 billion off of your expenses, and you added $8 billion to the top line. So yeah, your income from operations is going to explode from $6.4 billion all the way up to $16 billion. Your net income increased by nearly $10 billion from 4.6 all the way up to 14 for the 12 months. It's not as impressive. And I know this is a fourth quarter where advertisers like spray a bazooka. They don't care about CPMs or anything like that. But this was a great quarter for this company, needless to say, and the shares are being rewarded. Company's got a boatload of cash, not a lot of debt. We'll get here down to the cash flow statement. They don't have a lot of uses for these cash, although they do spend a lot on property, plant, and equipment. I'll show that to you. On a cash flow statement, you pull down a net income, and again, it was $14 billion for this quarter compared to $4.7 last year. Even on a full year basis, you went from 23 up to nearly 40. They don't got a ton of depreciation. They've got some share-based compensation, but not much. I tell you what, if you got laid off by Meta over the last year, you got to be feeling like crap looking at these numbers, because your net cash provided by your operating activities over the last quarter went from 14.5 all the way up to 19.4. Boom. And then for the full year, you did $71 billion. Now, the company does spend a fair amount on property, plant, and equipment. They're building their own servers. They've got custom silicon they're working on. They're doing all types of things. I really like what they're doing. 7.6 on the property, plant, and equipment, but look, it's actually less than last year at 9. So they even curtailed that a little bit. So you got this $19 billion. You're spending just 7.6 on a decent quarter on property, plant, and equipment. So you got a lot left over here from a cash flow perspective. So they're going to buy back the stock, and now they're going to pay you a dividend. I mean, literally not much to get upset about. Now, here's the spot where you're going to get upset with Meta. And this what led to the drop from 250 down to 90 was this reality, and it's the Reality Labs. Over the last year, you went from 727 on a quarterly basis up to $1 billion. It's the first quarter in a while where we've actually seen growth, and it's in a Q4 where people are giving away those headsets, and it's a reasonably priced device that it could be somebody's main Christmas gift, or I could see if you're in a relatively wealthy or affluent family, you could just give one of these $200 devices as more or less a toy. And so you saw growth there, but the problem is the Reality Lab, and I tell you what, if they never started this reality, and maybe this Reality Labs business leads to something over at Meta, really, really great. But if they never started this business, you would have never, ever had this big of a drop. Would the shares have dropped? Yes, but they would have found some footing, because you are burning a hole in the ground in terms of money. Last year, they lost $4.3 billion on that unit. This year, despite the revenue growth from 727 up to $1 billion, you still lost $4.7 billion. That's still a rather significant amount of money, but their family of apps is just making so much more money. Look at this. over the last year on a quarterly basis, you made 10.7 last year. You burned through almost half of it on Reality Labs. Now you're making 21. So 4.7 is not nearly a largest percentage of that. And you printed this 16 billion. But look what the company prints on an operating income if you just strip out Reality Labs. You would make just $1 billion in less revenue, but you'd churn out an extra nearly $5 billion on that operating side. Again, they better have something absolutely spectacular from Reality Labs, because over the last 12 months, that business unit has only generated $1.9 billion. Last year, they actually had higher revenue at about $2.2 billion, and your losses accelerated from 13.7 up to $16 billion. So yes, Reality Labs might become something. People might strap these headsets on, but how much operating loss are we going to churn through before that comes to fruition? And then at that point, is Apple in the business? How many Chinese competitors are in the business? Is Sony in the, there's all these other competitors that will drive down the margins of this device. I don't know. I still think it's a waste of money, but when you increase your operating income by $20 billion on your main business, and over the last quarter, it increased by over $10 billion or nearly $10 billion, investors are going to look the other way. And speaking of looking the other way, I can't even get the green candle on the chart. Shares of Meta not reflected here since I'm recording this so late, but I'm seeing, at least on the last print, Meta trading in the after hours up $60. Certainly a change from 2 years ago when the shares were trading nearly in reverse fashion, down nearly 20% from highs of 323. Meta Platforms have completed a U-turn. We told you to sell near the beginning of the U-turn. We told you to buy, not at the bottom, but at the first signs of recovery. Those of you that followed our advice probably made a little bit of money. Those of you that are still upset about the video I posted 2 years ago, well, I don't feel sorry for you. Hopefully you guys have a wonderful day. And if you own Meta shares, it is a wonderful day. The company is doing a fantastic job. If they get rid of Reality Labs, shares would probably go up another 20%. We'll be back tomorrow. It'll be later in the day. I've got some stuff going on Friday, but it'll be later in the day. We'll recap all the news and see where these stocks ended up at the end of the week. Hopefully you guys enjoy today's video. Back again soon with more. Good luck with your investments.